Others that are pushing that in various ways. I mean, certainly there's some pushback, but I think the pushback is really more from the utilities. Tends to be they want a clear way that they can get their cost recovery, or if it's something that they can get a rate of return on, that they're able to do that. But at least if they get their cost recovery, they want to remain neutral. You know, in some cases they'll say, fine, you want us to be more efficient, cool. We just want to stay neutral. You know, that's fine. And you know, in the states where you have decoupling, in the 19 states, that's been one way that's happened. Or you have, as part of an energy efficiency portfolio requirement, that the utilities made whole around that, and then they're fine with it. It's not it's not been an easy battle. We're not trying to fight the battle of let's create more energy efficiency portfolio standards.
But I do think I think that the smart grid is going to allow more direct access to the consumer and be able to bypass in the future, not today, consistently across the board, go directly to the consumer with your products and services, and find ways to provide those services we talked about, not so much generation, but services directly to consumers, and find ways to monetize. I mean, the smart grid, to be consistent with the communications analog is going to be kind of like the internet in a way.
And I think you've hit on an important point. I can probably name you 10 things that you know the price of, and if I ask you what price you pay for electricity, you'd probably have no idea. And the reason for that is consumers of electricity have been very insulated from the cost of generating electricity and transporting it and what you pay for it. Smart metering will change that. They will put you more directly in touch with the service that you're taking. But we've just started that point. And the utilities are simply reflective of that. You know what your permitted cost of how many minutes you get free on your mobile phone, or what your cable bill is, or what a quarter pounder with cheese costs. Most people don't understand what they're paying for electricity, and that's a small tip of the problem that this industry faces.
And part of that's just because there's never been anything that remotely resembled a choice for a customer, or the ability to impact that, right? And so, I mean, as you start to have more consumer choice, and there's examples of this both within the regulated and the deregulated industries. Within the regulated side, where there may be a different pricing option, whether that's a peak time rebate or a critical peak pricing or time of use pricing, or something that somebody can sign up for a time differentiated type of price, or in a deregulated market where you have a whole lot of those offerings. I mean, TXU I think came out with a unlimited free nighttime power usage, right? I mean, sort of gamers unite, right? You stay up all night. And
about 10 years after unlimited nighttime dial-in minutes.
Right. I mean, right. But there's when you sort of have the ability, and then they can have 25 different pricing plans and say, hey, Austin Energy is, again, sort of in a more regulated format, municipal utility. Austin Energy's been offering the ability to hedge your price costs, right? And this is how they finance their renewable energy development, is they've basically been selling off the blocks of renewable power to consumers and saying you want to fix your price of electricity by wind power on a 5-year contract, and you'll have a fixed price of electricity. And so, I mean, there's the opportunity for innovation within that, but hasn't been typically the way that people have been doing that. But when you do see that starting to happen, again, both in the regulated and the deregulated utilities, then it's back to consumer choice, it's back to consumer empowerment. And when you have that, then there can be a fundamentally different equation.
And just to square this, VCs were operating in this space as if what we just described had actually happened already.
Yeah.
It had happened everywhere.
So we're going to open it up for questions here momentarily. Hank, one final question. I don't think he coined it, but I heard this first from Dale Hatfield, that the future has no lobbyist. And anecdotally, at the Illinois Power Agency, are you seeing that problem, that future startups are having trouble articulating their voices, or are voices coming in and making the advocacy pitch?
They're not. I mean, Justin talked about demand response energy efficiency programs, that the state has policies to promote those programs and those products, but we're not seeing a lot of providers of those services and products come to the state.
So it's an interesting VC question. So you think about the cost it would take for the clean tech industry to raise its voice as loud as the what was the policy group that put out the whole America's Fuel thing, right?
Yeah, those people.
Whoever those guys were. Great. I mean, they totally dominated the conversation. But somebody's got to pay for that, and VCs are not going to pay for that. So all these companies that have, I mean, nobody's going to pay for that.
Or it's got to be a collective effort. So this is what I was getting to in terms of, fortunately you have a business model that it's not path critical for you to win these battles. Or you can disabuse me if this is wrong, but there are a lot of other startup insurgent businesses for which that is path critical. On a one-by-one basis, they will not win those battles. But if there's a way to aggregate them, maybe there's a better chance for that voice. All right, let's open up the questions. And students first. Student?
Not a student, but very relevant to this point.
Well, if so, special dispensation, then we'll go to students. Go ahead.
My name's Eric Van Orden. I'm with the Energy Efficiency Business Coalition, and it is very relevant to what you're talking about. My question is if there are a number of different places to fund and encourage energy innovation, from R&D in the government sector to early stage, late stage, to IPO, who is funding that creating of the market? And EEBC is doing just that here in Colorado with pushing for energy efficiency programs on behalf of a coalition of businesses. But I tell you what, it's a challenge of the chicken and the egg, because the businesses aren't there without the business, and we can't push things forward without the business. So who are there folks that you guys know, or is there a role to fill of creating this, that as the government steps back, that there's a business opportunity there to drive this market and create it?
I mean, I think it's a question of scale, right? Which is, I mean, are you doing it sort of at an individual state by state or municipality by municipality? I mean, if you want to answer that on a big level, right? If you look at the Renewable Portfolio Standard, Energy Efficiency Portfolio Standard legislation that was in Congress, in 2009, and didn't get passed, but had it gotten passed, it would have been a 20% renewable portfolio standard that the utilities could have met a quarter of it with energy efficiency, and it had a DG carve out, right? It had distributed generation carve outs for a requirement for amount of small scale, solar and other technologies, right? So I mean, if you want to talk about a big scale across the country, then that's something that would need to happen if you want to have every utility, every state, everything be consistent. There's a question of what's going to happen at the federal level. If not, then it sort of becomes this individual state by state, PUC by PUC, municipality by municipality. And there are people who are working on all of those, but if you want the sort of big sledgehammer, I mean, federal policy is the answer.
So, and I think there's it's probably lots, but I've seen two big mechanisms to try to create demand. One is sort of the environmental, national security reasons. Let's for better purposes, scare everybody into wanting efficiency or wanting renewable energy. And that really hasn't worked very well because other people have bigger problems that affect them day to day. And then there's what I start seeing in the solar industry, which I think is probably the more realistic way, is you're seeing that industry mature a little bit and fragment, and you have people that are actually developing business models around customer acquisition. They're leaving the rest of it out. Somebody else will handle the system, somebody else will handle installation. I'm just going to be an expert on customer acquisition, and I'm becoming the best in the world about finding customers that are at all inclined in wanting solar, mostly residential right now, but ultimately commercial as well, and bringing them in fast. And they're using the best techniques that come from, all the other industries that have been doing that for years. And that's what efficiency companies need to get really good at. That's what other clean tech companies really need to get good at, because you've got to get to the customers and you got to talk to them about things that they care about right now, not what we think they should care about because they're these bigger societal problems.
I mean, just to get a sense for the implications of your question, if you are a power generation utility that's not in a market environment which incentivizes energy efficiency and other things, you're selling less electricity, you're making less money. Very few utilities I know are going to sign up for that unless they're forced to. How do you do that? Well, you get folks who have a stake in the outcome to push for that change. You get enlightened regulators. You've seen some of that happen across the United States, in the Northeast and in Texas and in California. But you're trying to change a utility without putting in place a framework that allows the utility's business to continue to grow. And the two need to go together.
Justin, this has always made sense to me, but I recall when you were coming through Techstars, you guys had a different view, at least at that point, that there would be other ways that utilities actually would want to reduce usage. What's it turned out to be?
Yeah, well, I mean, certainly the policy, you know, it's sticks or carrots, right? I mean, either they've got a requirement that they've got to go do it, and so then it's a compliance reason, which is the case for a lot of them. You know, there's also the sort of carrot side of that for them, which in places where you have decoupling and they can sort of achieve the same result, you know, whether they're reducing kilowatt hours or selling a kilowatt hour, that in some cases it might actually be easier for them to actually reduce that kilowatt hour, that it is a less risky path or a less painful path for them to do that. I do think that you have, it's, you know, outliers, but there are places where utilities are recognizing that there's a shift in their business model and they do actually have to get ahead of some of that. And so there's some other reason for them to do that. There's a whole other host of motivations, right? They just put in smart grid and they're getting skewered by everyone of saying, what did I get for that, right? And so, I mean, there become other business motivators for them. But yeah, I mean, it's either a regulatory decision or somebody being a progressive thinker, and I think there's a lot of both of that. But yeah, I mean, they're not going to innovate unless one of those market or regulatory forces force them to. It's not, and frankly, you don't blame them. I mean, that's their business model.
Got a student question up there.
Hi, McKay Miller from NREL. I have a question for Hank. There's been a bit of an implicit assumption, building on the last comment by Justin, an implicit assumption that the regulatory landscape is going to be key to market creation, et cetera. And so my question for Hank is, you seem to be closer to this domain. What's the appetite for that sort of regulatory stance? Are any sorts of conversations like this happening in the regulatory domain in this country, and if so, where?
I think they are happening. You're seeing, like I said, you know, municipalities, not just in Illinois, but along the Northeast. Boulder, I think, did municipal aggregation as well, didn't they? So you've got, you know, municipalities starting to play in that role. And they're not just aggregating, they're also recognizing that they've got to play some role in the regulatory arena as well. You've got California is obviously, you know, very active in the regulation. So I think there is an appetite to do that. There are a lot of organizations out there as well, Natural Resource Defense Council, ELPC, a lot of organizations that are trying to find ways to motivate the utilities to you know, increase their use of energy efficiency, demand response, lower peak demand, things of that nature.
There's some really interesting things going on in the UK in terms of some new proposals there around essentially demand optimization as being the framework for how utilities earn their money, which is that, you know, you're incentivizing not on the number of kilowatt hours spent or, you know, or capital, you know, invested and then the return on that capital, but that, you know, essentially trying to align the incentives for the utilities to be the most effective at managing demand, which means a variety of these different things that we're talking about. You know, and there's certainly some other examples from Europe as well on the renewable side from the feed-in tariffs and others that have been much more effective policy mechanisms. And some of that's starting to happen here, but certainly not as much.
Yeah, I think the feed-in tariffs is a potential enabler as well, where you're basically requiring the utilities to tariff their purchase of things like demand response energy efficiency, and you're basically reducing the transaction costs. It makes it easier for companies like Justin's to be able to get in the market and market those services directly to the utilities.
Other questions? We'll open it up.
In regard to the demand response, this is law school, so I'm personally interested in the evaluation of the energy efficiency of specific products. I mean, when you take the macro and you start drilling down to your product and selling it on a basis of a certain amount of savings, I would like some comment on the modeling for measuring that energy efficiency, because I don't see it at this point drilling down to your product, hanging on the wall, or interacting with an iPad, and there are some much more sophisticated things available. So, you know, Leeds has been, the Green Building Council has been sued for not meeting LEED standards, and then we designed a building what's going to happen to some of these energy efficiency items that don't really, they get lost in the complexity of who saved the energy. Was it my LED lights, or was it the new efficient furnace that I put in? I'd just like some comment on that.
Is your question about the savings at the measurement for the end consumer, or for like a utilities portfolio of DSM programs?
I made the investment.
You the consumer.
You come to me, I've got a building, I've got a house. You want me to make an investment for energy savings, meeting demand response, whatever it is. And you model this and you say, you're gonna save so much energy. I make the investment.
Mm-hmm. Well, the first answer I would give is that I think we're starting in the wrong place by presenting it to customers about the dollars that they're going to save or not, because that's been, I think, one of the fundamental issues with how we've presented a lot of those programs to consumers. Because for a customer whose bill is $100 and we say that this is going to reduce your bill by 5%, $5 a month isn't all that compelling of a thing. So I'd say, first of all, if the marketing reason to try and get somebody to do that was based on the dollar savings on their bill, then I think we will never achieve the kind of scale that we can achieve. That's part one. But
you're selling your product on PR.
No, we're appealing to other motivations for people, right? I mean, this is the behavioral economic side of it.
I think it's an interesting issue. I'm going to ask that we go ahead and open up another question, because this starts to open up a new panel, really, in terms of discussion and topic. I think it's an interesting issue, but other questions? In the back.
Hi, I'm Scott Dunbar. So along with this theme that regulation is just not friendly to innovation in the energy sector, what are other regulatory schemes that the industry should be talking about? So, for example, price caps and decoupling are two examples that are thrown out there. And of course, deregulation is kind of a dirty word, so what other schemes are you all thinking about? What have you heard out there? What should we be talking to regulators and the legislators that legislate the regulators to do?
I can take a shot at that. I mean, I wouldn't characterize it that way. I would say you need to affect regulatory change in order for the benefits of technological innovation to basically flow through the system to customers or power generators. And what we've been focused on is you need to recognize that and then mobilize to make that change. A lot of what needs to be done to foster innovation and lower prices and encourage new technologies exists around the world. One of the most successful feed-in tariff regimes exists in Ontario, Canada. It's been wildly successful. There have been great demand response programs in Europe, in the UK, in parts of the United States, in New Zealand, for example. I don't think anyone here is talking about reinventing the wheel. What we're saying is you need to recognize the playing field and then adapt accordingly. But if you try to take lessons from other segments, other industry segments, and apply them to this space without, recognizing that this is a different environment, it's going to be expensive, and you're likely to fail.
Yeah, I don't know that I have any specific policies. I sort of take the standard RMI answer, which is create business opportunities, create opportunities for people to make money in a market, and policy will follow. Ultimately, I do think that policy is ultimately set by the biggest institutions in society. So it's either nonprofit pressure or NGO type pressure that sets sort of social needs, or it's the entrenched industries or industries that can gain from it. And so what we need to do is create opportunities for those institutions to make money, and they will lobby for the right policies themselves. So create demand, get people excited about it, get companies excited about it. There's an answer, I think, to the original question that is apropos here, which is the conversation about energy efficiency is completely different on a consumer level and on a big commercial level. With big commercial level, it's never a conversation about just investing in one technology. It's investing in a portfolio of technologies across a portfolio of properties. And when they understand that they can run their business better by running their buildings better or using their energy better, then they will demand it from their utilities. They will, either it will be demanded through lowering rate base, they'll literally demand it, and the utilities will ask, and they'll be asking the PUCs, they'll be lobbying the PUCs, and the utilities will be lobbying the PUCs for the kind of policies that will make it put money in their pockets. And to me, that's the greatest mechanism to change.
So we are on for a 20-minute break, and then we'll return for what I think is going to be a very interesting discussion around innovation and competitiveness as it relates to finance challenges. But first, please help me thank Ricahrd, Ned, Hank, and Justin for a very rich discussion.